Hello traders and welcome to another video review. Today is Monday 24th of January 2022. Let's take a look at the Forex calendar first. Plenty of PMI data in form of composite PMI, PMI manufacturing and PMI services will be published during the London session. We already have the PMI manufacturing and composite data from Japan. As you can see, all of them were worse than expected. We will see how this data will be during the London session from the Eurozone. The most popular and important countries are France, Germany and the whole Eurozone. The rest is not that much important. Of course, we got some data from the UK as well, manufacturing services and composite PMI. At noon, we got the Bundesbank monthly report. And during the New York session, we have ISM manufacturing data as well, together with the final services PMI and the composite PMI. All of those data are scheduled for release Q4. So PMI day across the markets. From the fundamental point of view, those are like a kind of important data, but not very much of the market mover, unless there is a big miss, more than 20% between the expectations and the actual reading. Nevertheless, it's worth to keep an eye on the continuous situation on the PMI manufacturing services and composite readings, due to the fact that those are early indicators and might tell us a little bit more about the current and further situation in the industry and economy of a particular country. So, because we are waiting for the PMIs from the Eurozone, let's start with the euro-dollar. The euro-dollar pair had broken out from this long-term channel. However, that was a false breakout, and this breakout was stopped immediately next day after the upper trend line had been violated. As you can see, the key technical resistance at the level of 1.1422 had been violated, but the other one at 1.1501 never been touched. The local high was 1.1485, and this is the bearish engulfing pattern and then continuation of this pattern. So right now we can put on the chart short-term trend line. This is the short-term support trend line. As you can see, so far the market is trending above this line. However, after the PMI data are published, the situation might be a kind of a different. So please keep an eye on any violation of this trend line towards the technical support at 1.1273. The other technical support is located at 1.1225, and then of course we got the low from the end of the November, 1.1186, and the key demand zone is still located between 1.1153 1.1167. It looks like the downtrend will be continued, and any kind of a breakout to the upside is immediately being capped by the bearish side of the market. Let's take a look at the euro to the Japanese yen, because we got data from Japan published today as well in form of the PMI data. As you can see, the market is following our scenario. What I mean is the ABC decline, which is the corrective, of course, decline towards the level of 125.54. Last week was a down week. We've been moving away from the local high made at the top of the wave B, which was at 131.59. Few days of consolidation, second attempt, pin bar, and then we are going lower. The nearest technical support is located at 128 127 and 127.91. The low of the wave A is 127.37, and if we break below this low, as you can see, I have it on my screen with the two blue arrows positioned. When we break up below this level, the road towards 125.54 is open. So the 127.37 is the key short-term technical support for this market. We can even put our arrows here, indicating the importance of this move. This will be a free wave move. However, it might change, it might evolve into more impulsive move in form of 1, 2, 3, 4, 5, but we will see that in the US future. So far it looks bearish and the market is following our path. Let's take a look at the crude oil prices as well. As we expected, the top of the wave 3 was made at the level of $87.91 per barrel. This is of course extremely overbought. The market conditions are as well extremely overbought, despite the very strong and positive momentum. This is the pin bar, this is the shooting star. Very clear information sent on the daily time frame chart of crude oil. This is the temporary top for the wave 3. We are going lower, and yes, indeed, we went towards 82.78. So that move from the top to the bottom, just 2 candles on a daily time frame chart, has resulted in more than 5% move. There you go, 636. This is 636. Yeah, well, 6 and something. 6 and 20, let's say. That means this move here is still lower than this move here. This is the correction of the wave 2. So that move is still a part of the overall market development to the upside. We are waiting for crude oil to resume the current up move. Supposedly we might see some kind of a consolidation here, some battle between bulls and bears around 85, 86, 87 dollars. As long as the level of 82.78 is the low, we can still assume that this is now the low of the wave 4. We are waiting for the wave 5 to develop, and this development would be at least towards 91.28. So this is the current situation on the crude oil. And last but not least, let's take a look at Bitcoin, of course. What is Bitcoin doing? The Bitcoin situation is getting pathetic right now. So this is a time when most of the participants will apparently see Bitcoin as a buying opportunity. Why? Because it has lost more than 50% of its overall value since the high at 69,129 dollars. So that is let me just change the color of this rectangle. Of course, for let's say this will be the color, this one. There you go. This is now supply zone. The levels between 39 and 41,000. So that's apparently the pressure of the bears is getting even lower. That means we are, of course, in a deeper trouble with the bulls. Market conditions are extremely oversold on the daily time frame chart. 20 points is the number. We haven't seen this number since last year. That's 25, and this is the May 2021, and the number of 20 has not been seen in years. I'm just going back towards 2020. This is March 2020. So that kind of sentiment has been seen instead of the pandemic, right? So we remember what's happened after the pandemic low, right? This is the pandemic low, and within 6 months we got brand new all-time high on the Bitcoin. So right now the situation in momentum is very similar. However, the price, as you can see, keeps getting rejected from the newest technical supports, technical resistance. Our last technical support now is the resistance 36,520. Where we are heading, it's obvious that we are heading towards 30,196, 28,964. Unless we touch this level, there is no chance for this market to bounce. So we are waiting. Let me just show it to you clearly. We are waiting for a bounce like this. If that's not happened, the most of the let's say we will go here, or maybe higher. There you go. If that's not happened, the most of the market participants will panic and the Bitcoin will fall even lower, maybe even towards $10,000 or lower. So this is the key level. This is the key zone right now, after the 39,540 and 41,188 had been violated. So please keep an eye on the zone, because let me just put it in a rectangle. Where is my rectangle? There you go. This is my rectangle, and I will make it, of course, a green again. So this is my green rectangle. That's the zone I'm talking about. Please be very, very careful, because as I said many times already, if we break below this zone, then the road towards the lower zones is open, just like it was here. That was the key demand zone. Tested, bounced, capped, broken, definitely broken with the high impact candles. Now we are heading here, and again, if we won't bounce from this level, then 23,000 is the next zone, and then of course we are stopping at 20,000. So please keep an eye on this level. That might look a little bit scary, but I still think this is the ABC correction, right? So not necessary of this 1, 2, 3, 4, 5 movement, but maybe some higher movements. Nevertheless, we are waiting for this for market reaction on this zone between 28,964, 30,196 for Bitcoin bounce. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.